Fantasy sports leader Dream11 has launched a new wealth management platform, Dream Money, as a strategic pivot following the Indian government's ban on online money-based gaming. This move comes in response to the online gaming bill, which has significantly impacted Dream11's core operations by criminalizing money-based games and related transactions. Dream Money, currently in beta on the Google Play Store, enables users to invest in gold and fixed deposits, starting with as little as 1,000 rupees, without needing a bank account. This shift highlights Dream11's attempt to leverage its substantial user base, consisting of approximately 300 million registered users, to explore fintech opportunities and mitigate the effects of the regulatory crackdown. The introduction of Dream Money underscores Dream11's broader strategy to diversify its business model beyond fantasy sports. The company has ceased all paid contests and transitioned to a free-to-play model, while still investing in its ecosystem through ventures like FanCode, DreamSetGo, and Dream Games Studios. Despite the regulatory challenges, Dream11 emphasizes its commitment to innovation and growth within the digital entertainment and fintech sectors. While advocating for progressive regulations rather than outright prohibition, this pivot reflects a growing trend among gaming companies to explore financial services as a means to sustain growth and adapt to changing regulatory landscapes.
Pakistan's finance minister, Mohammad Aurangzeb, has emphasized the urgent need for the country to accelerate its transition to a digital economy by integrating blockchain, artificial intelligence, cryptocurrency, and Web 3.0 technologies. Speaking at the Leadership Summit on Blockchain and Digital Assets, Aurangzeb highlighted that these technologies could drive efficiency, cost reduction, and innovation within the economy. He underscored the importance of digital transformation, especially as Pakistan recently exited the Financial Action Task Force's FATF gray list, which had previously posed challenges for international financial transactions. Aurangzeb also announced the establishment of the Pakistan Crypto Council (PCC) and the impending session of the Pakistan Virtual Assets Regulatory Authority (PVARA), which aims to develop a regulatory framework for digital assets. With over 40 million crypto users and an estimated $300 billion in annual trading volume through informal channels, Pakistan is positioning itself as a promising frontier market for digital assets. This move is crucial as the country seeks to capitalize on its young, tech-savvy population, with over 70% under the age of 30, to drive economic growth and innovation. The minister's remarks signal a strategic shift towards embracing technological advancements to enhance transparency in digital transactions and bolster remittance inflows, deemed vital for the nation's economy.
United Parcel Service (UPS) is navigating a significant transition as it seeks to update its operations amidst a return to pre-pandemic demand levels. During the COVID-19 pandemic, UPS experienced a surge in demand due to increased online shopping, which temporarily inflated its stock price. As the world adjusted to living with COVID-19, demand normalized, leading to a 60% decline in UPS's stock from its pandemic peak. Despite this downturn, UPS is focusing on streamlining operations and enhancing profitability, which involves updating its operating systems and reducing lower-margin deliveries, notably from Amazon, its largest customer. These strategic shifts have incurred costs, such as $57 million in after-tax transformation strategy expenses in Q2, impacting short-term financial performance. The company's efforts to focus on more profitable business segments have yielded some positive outcomes, such as a 5.5% increase in revenue per piece in the U.S. market. This improvement is attributed to a better customer and product mix, even as overall revenue saw a 2.7% year-over-year decline. Despite these challenges, UPS managed to maintain a flat adjusted operating margin, indicating progress in its strategic realignment. However, the sustainability of its dividend, currently yielding 7.4%, is under scrutiny, with a payout ratio exceeding 100% in the second quarter, posing a risk for income-focused investors. For those interested in long-term investment and turnaround stories, UPS's ongoing transformation and critical role in the global delivery business present a potentially rewarding opportunity.
The Indian stock market experienced a significant downturn last Friday, breaking a six-day winning streak, as major indices such as the Nifty 50 and BSE Sensex witnessed panic selling ahead of the Jackson Hole Symposium. The Nifty 50 lost 213 points, closing at 24,870, while the BSE Sensex dropped 693 points to end at 81,306. However, auto sector giants like M&M and Maruti were among the top performers, in contrast to major losers like Grasim and Adani Enterprises. Analysts predict a potential trend reversal for the Indian market next week, buoyed by improved global sentiment following U.S. Fed Chair Jerome Powell's dovish remarks at the symposium, hinting at a possible rate cut in 2025. The buzz surrounding a potential U.S. Federal Reserve rate cut has significant implications for the Indian market. This dovish stance has put pressure on U.S. dollar rates and bond yields, potentially pausing the continuous selling by foreign institutional investors, FPIs, and providing a bullish push for Dalal Street. Additionally, the speculation of a rate cut by the Reserve Bank of India, RBI, could further stimulate the market, offering added flexibility in monetary policy. However, geopolitical uncertainties, notably the ongoing Russia-Ukraine conflict, remain a wildcard that could influence market dynamics. As investors navigate these developments, they are advised to stay informed and consult with certified experts before making investment decisions.
Wayfair Inc. NYSE, has seen significant insider selling activity, with co-founder Stephen Conine offloading 85,000 shares valued at approximately $6.8 million on August 20, 2025. This transaction follows a series of sales by Conine over recent months, cumulatively reducing his stake by 15.62%. Despite this, Wayfair's stock has demonstrated resilience, trading up 1.8% to $77.76, supported by robust quarterly earnings that surpassed analyst expectations. The company reported an earnings per share (EPS) of 87 cents, notably above the consensus estimate of 33 cents, with revenue reaching $3.27 billion, a 5% increase year over year. Institutional investors have shown strong interest in Wayfair, with significant position increases by firms such as Alyeska Investment Group and South Point Capital Advisors. This institutional confidence is reflected in the stock's positive market performance and recent analyst upgrades. UBS Group, for instance, raised its price target to $91, maintaining a buy rating, while Wells Fargo and Company set an $84 price objective, citing an overweight rating. The stock's consensus rating is moderate buy, with a target price of $67.65, indicating optimistic sentiment despite Conine's sales, which may suggest strategic financial repositioning rather than a lack of confidence in the company's future prospects.
Circle Internet Group, NYSE CRCL, has recently seen significant insider trading activity as CEO Jeremy Allaire sold 357,812 shares at an average price of $127.08, totaling approximately $45.47 million. This follows a previous large sale on June 6, where Allaire sold over 1.5 million shares at $29.30 each. Despite these sales, Circle Internet Group's stock has shown resilience, opening at $134.79, marking a 2.3% increase. The company, with a market capitalization of $30 billion, has experienced a wide stock price range over the past year, from a low of $64 to a high of $298.99. The insider sales come amid a mixed analyst outlook. While some firms, like Citigroup and Needham & Company, have issued buy ratings with target prices as high as $250, others have opted for more conservative hold or sell ratings. The consensus target price stands at $170.91, indicating varied expectations for the company's future performance. Circle Internet Group's strategy focuses on global economic integration through digital value exchange, aligning with its mission to build a new economic system founded on Internet technology. Institutional investors have also shown interest, with several acquiring new stakes in the second quarter of this year. This activity, coupled with the mixed analyst ratings, suggests that the market is closely watching Circle Internet Group's strategic moves and financial performance. The company's high price-to-earnings (PE) ratio of -10,651.97 reflects its current earnings challenges, yet its innovative mission continues to attract attention from investors and analysts alike.
Zillow Group Inc., NASDAQ-Z, has been assigned a consensus rating of hold by analysts, as reported by MarketBeat. This rating comes from 13 analysts covering the firm, with 8 recommending a hold, 4 suggesting a buy, and 1 advocating a strong buy. The average target price for Zillow over the next year is approximately $88.29. Notably, Bank of America and J.P. Morgan Chase & Company have recently adjusted their price targets for Zillow, with the latter raising its target to $94 and maintaining an overweight stance, indicating optimism about Zillow's potential performance. The stock has seen significant insider activity, with CFO Jeremy Hoffman and Chairman Richard N. Barton selling shares collectively worth millions, which may signal insider confidence in the current stock valuation. Despite these sales, institutional investors continue to show interest, with hedge funds and other institutional investors owning over 71% of the company's stock. The stock has experienced a notable increase, trading up 7.4% recently, and is nearing its 52-week high of $89.39, reflecting positive market sentiment. Zillow Group's operations span various real estate services, including premier agent services, rentals, and mortgage solutions, positioning it as a significant player in the U.S. real estate market. The company's PE ratio of -336.31 and high beta of 2.09 suggest volatility, which could appeal to investors seeking high-risk, high-reward opportunities. As the real estate market evolves, Zillow's strategic moves and market performance will be closely watched by investors and analysts alike.
The airline industry is currently under close scrutiny as 7 prominent stocks, including American Airlines Group, LATAM Airlines Group, United Airlines, Joby Aviation, Delta Airlines, TransDigm Group, and RTX, have been identified as noteworthy by MarketBeat's stock screener tool. These companies have recently experienced the highest dollar trading volumes in the airline sector. The airline industry is known for its high fixed costs and sensitivity to external factors such as fuel prices, economic conditions, and regulatory changes. These elements, combined with the cyclical nature of the industry, can significantly impact stock prices, making the sector particularly volatile. American Airlines, United Airlines, and Delta Airlines continue to dominate the market with expansive networks and strategic hubs across the globe, with American Airlines operating through major hubs like Dallas, Fort Worth, and Miami, while Delta has a strong presence in Atlanta and New York. Meanwhile, Joby Aviation is making strides in the emerging air mobility sector with its focus on electric vertical takeoff and landing (eVTOL) aircraft, aiming to revolutionize urban air transportation. TransDigm Group and RTX provide critical components and services to both commercial and military sectors, underlining the interconnectedness of commercial aviation and defense industries. The current focus on these airline stocks reflects broader market interest in the recovery and future growth of air travel post-pandemic. Investors are closely monitoring these companies' financial health and strategic initiatives, especially in light of fluctuating travel demand and ongoing economic uncertainties. The performance of these stocks could offer insights into consumer confidence and broader economic trends, as the airline industry is often viewed as a bellwether for economic activity.
The financial landscape is abuzz with interest in blockchain stocks, as highlighted in MarketBeat's latest stock screener. Key players such as Oracle, Applied Digital, Riot Platforms, Bullish, Core Scientific, Globant, and Bitdeer Technologies Group are at the forefront, drawing significant trading volumes. These companies span various sectors, from enterprise IT solutions and data center operations to digital asset mining and blockchain infrastructure, reflecting the diverse applications of blockchain technology. Investors are keenly observing these stocks for opportunities to tap into the burgeoning decentralized systems market. Oracle Corporation, ORCL, stands out with its expansive range of cloud-based services integrating blockchain solutions into enterprise resource planning and supply chain management. Meanwhile, Companies like Riot Platforms, Riot and Core Scientific, Cores, are making strides in the cryptocurrency mining sector, offering infrastructure and hosting services critical to the digital asset ecosystem. The focus on blockchain is not limited to traditional tech firms. Globant, Glob, and Bitdeer Technologies Group, BTDR, are also innovating with blockchain-driven solutions, enhancing digital experiences and offering mining services, respectively. The increased trading activity in these stocks underscores the growing investor confidence in blockchain's potential to revolutionize various industries.
Charles Schwab Corporation, NYSE-SCHW, has received a consensus moderate buy rating from 21 research firms, with a one-year average target price set at $99.60. This comes as the firm's stock is currently trading around $95.65, indicating a potential upside. Notably, Truist Financial, TD Securities, Citigroup, and Morgan Stanley have all recently adjusted their price objectives upwards, reflecting a positive sentiment toward Schwab's growth prospects. The company's robust financial performance in the latest quarter, with an EPS of $1.14 beating estimates and a significant 24.8% increase in revenue year-over-year, underpins this optimism. Schwab's strategic initiatives, including a $20 billion share repurchase program, further signal confidence in its valuation and future growth. Institutional investors have shown strong interest in Charles Schwab, with major players like Vanguard Group, Price T. Rowe Associates, and State Street Corp increasing their stakes. This institutional backing is significant, as these entities collectively own over 84% of Schwab's stock, suggesting confidence in its business model and market position. The company's financial metrics, such as a return on equity of 19.30% and a net margin of 33.68%, highlight its operational efficiency and profitability. Additionally, Schwab's recent dividend announcement and its low payout ratio of 29.03% suggest a sustainable dividend policy, appealing to income-focused investors. Overall, Charles Schwab's strategic financial maneuvers, strong institutional support, and positive market sentiment position it favorably in the financial services sector. The company's focus on expanding its wealth management and advisory services, coupled with its robust financial health, sets a solid foundation for continued growth and shareholder value enhancement.